fire in 2016 and India will be just short of the 8% GDP mark. That's the finding of a CNBC-TV18 poll among economists. Ritu Singh is standing by with the details. Ritu, you've been so basically, Ritu has done a comprehensive CNBC-TV18 poll to understand exactly where areas like inflation, fiscal deficit will stand in the next 2016. Economists do believe that growth will stand at that 8% mark, and that is what the outlook will be going forward. But let's in fact, so if you look at the overall, I'll give you details of the poll. We don't have Ritu with us right now, but all in all, the poll that Ritu did do was that bond yields will hit about 7.52%, that is by March 2016, which is fairly bullish. But if you look at the overall outlook as far as fiscal deficit is concerned for FY16, that should be about 3.97%. Now, for FY17 also, we have some kind of estimates by economists. We're expecting fiscal deficit for FY17 to come in at about 3.71%. So where does GDP growth stand then? By FY16, we're expecting GDP to be not very bullish, but fair enough at the 7.45% mark. At FY17 will be a little bit of an increase, will from 7.4 to 7.9%. Okay, we have Ritu with us. Ritu, comprehensive details. I've gone through some of the details, but take us through the various parameters. All in all, 2016 will be better according to economists?
Definitely, according to our poll, economists are bracing for a better 2016, but only marginally better. As you read out some of the numbers, GDP is likely at 7.45%, which, remember, is in the 7 to 7.5% range projected by the government. However, by FY17, they expect that to further improve to 7.9%, provided the monsoons do not play spoilsport. That remains a big worry. Consumer price inflation is also likely to be at around 5.5% levels by March 2016, and further cool off to about 5% levels by March of 2017. Fiscal deficit is also likely to be maintained at 3.9%. However, for the next fiscal, the fiscal deficit is likely to come in at 3.7%, which, remember, is about 20 basis points higher than what the government has projected. This will likely be because of the impact of the 7th Pay Commission recommendations, as well as a higher public expenditure that may lead the fiscal deficit to be slightly wider than is being anticipated right now. Rupee levels are also likely at 66.3 by March 2016. But by the end of the year, they're expecting further depreciation to about 67.53 by the end of 2016. That is, bond yields are also likely to rise to about 7.5%. And as far as rate cuts are concerned, 60% of our respondents were hopeful of a 25 basis rate cut in the entire fiscal FY17, but 40% are hoping for a 50 basis point rate cut. So all in all, the economy does look slightly better, but external headwinds will be the main cause of concern.
All right, Ritu, thanks for joining in. Remember, that's an exclusive CNBC-TV18 poll conducted by Ritu Singh.